There's many opportunities where if we didn't have a consulting agreement in place, we couldn't have entertained, spoken to. The answer would have been like, talk to me after you've made the decision, and then I'd love to help you. Well, guess what? So does the 14,000 other advisors from my previous firm, let alone every other RIA firm and Wirehouse advisor out there.
Welcome, ModelFAs. David DeSell here, CEO of ModelFA and your host of the ModelFA podcast. And I'm very excited to bring Craig Robson to you today. Craig is the founding principal and managing director at Regent Peak Wealth Advisors. And he has a very interesting story, one that a lot of our listeners find themselves either in the midst of or considering. He spent a number of years in the Wirehouse model, particularly with Merrill Lynch, and within the last handful of years, actually transitioned over to the RIA space. So we're going to spend a little bit of time understanding and digging deep into that experience. Also, he doubled his AUM and the amount of team members over that period of time as well. So with that being said, and also wanted to share a quick thank you to the folks over at Street Cred. Street Cred are the folks who brought Craig and us together for today. But with that being said, Craig, welcome to the show.
Well, thanks, David. It's great to be with you.
Let's dive right in. So you were at Merrill for 25 years. Okay.
Right.
And obviously there were reasons why you ultimately left Merrill Lynch, but you also stayed there for 25 years. So I think people are quick to throw shade, for lack of a better way to put it, wherever they came from. But I'm curious to know, what did you really enjoy about your experience in the Wirehouse setup?
You bet. So I like to say to people ask, like, as you mentioned, it couldn't have been that bad if you're there for 25 years. And it wasn't, right? I think really the last 10 years is when we realized, and we'll unpack that a little, why we had to make a change. But to specifically answer your question, I tell anybody who's interested in joining the industry that, a lot of these larger firms have great training programs, and you can learn a lot from those programs. And I certainly were one of those individuals. I come from an engineering background. I joke I'm an engineer. I worked at a consulting firm, which everybody knows today is Accenture Consulting, but was Anderson Consulting, way back when. And so I was looking for a firm that could really teach me the business. And I think that's really a lost art, some things we'll talk about today. So to just summarize, I think the good things about that is you have lots of resources. There are lots of talented individuals there that can help you in terms of growing your practice. There's lots of coaching opportunities. So, the quick answer is going to a larger firm has many benefits when you first start off. Or I like to say it's a great place to start, but probably not a great place to retire.
It's interesting that you say that, because I, in slightly different words, say the same thing regarding my experience with Northwestern, where I got started. And again, a lot of people are quick to highlight all the bad things about a company after they leave. But I always say I'm where I'm at today because of my experience at Northwestern, and particularly, like you said, because of the training program. It teaches you the business, it teaches you tenacity, right? It teaches you follow-up, it teaches you business development. And I think that there's currently and has been a gap in the independent space where your training predominantly is reliant on you being a self-starter and going and finding all this information, or hoping that the guy or the gal's firm that you're joining actually has time and bandwidth and the knowledge to train you. And oftentimes it's not the case. So you find yourself as what we refer to as the indentured servant, the person who is sold a vision but gets stuck in a particular role and doesn't have the ability to progress. So my understanding is you branched away from Merrill and into your current business, Regent Peak Wealth Advisors. Was it five years ago?
Correct. We just celebrated our 5th year anniversary on May 3rd of 2024.
Nice. Congratulations.
Thank you. Big milestone.
What's the ride been like?
The ride has been amazing. The ride has been challenging. And it's everything I thought it would be and then some. So, for your audience, just to maybe take a step back, if I may, let me just kind of describe who we are and who we serve.
Please.
So Regent Peak Wealth Advisors is an RIA firm based in Atlanta, Georgia. And we proactively serve wealth creators. And David, I think of wealth creators and we think of them in really four categories. One would be C-suite executives. So CFOs, CEOs, chief technology officers, right? We've got lots of large publicly traded companies based here in Atlanta, Georgia, and that's not all we serve, but there's plenty of them. The second would be business owners, right? So business owners, right? I'm a business owner. The majority of their net worth is tied up in the four walls of their business. And they need help pre-exit. They need advice and guidance and counseling before the liquidation opportunity or a monetization event. And we want to be able to help those individuals so they can maximize their value. The third would be multifamily generational wealth. We may touch on this later, but we want to help matriarch and patriarchs. And those are typically individuals in their late 60s, 70s, 80s that have created significant wealth over time. And we go to them proactively and say, the statistics say that next gen and future generations, your kids, your grandchildren, unfortunately, will not do a great as job as you do in terms of preserving and growing that wealth. And that's for lack of education, not having an advisor, not really focusing on the things that are most important. And we want to schedule meetings, we call them family meetings, where we can meet with the matriarch and the patriarch and their kids in terms of making sure that everybody understands why it's so important that mom and dad work so hard and to carry through those values and those goals over time so we can flip the script and hopefully have better outcomes for next generation. And then lastly, divorcees. That's the smallest percentage of our practice, but these are sizable relationships. And these are individuals that, once again, they need representation. They need advice and counsel before going into the divorce proceedings. Their CPA and attorneys are fantastic at what they do, but they realize they need somebody to tie it all together. And that's where we come in to help, even if we have to go through mediation, right? To help those individuals so they can maximize the value coming out of those divorce proceedings and then creating them a financial plan on their life journey going forward. So that's who we are. And we did that. Here's the catalyst. We did that because where we previously worked, as I referenced earlier, over the last 10 years of my career, I realized more and more our practice was growing. Our clients were becoming bigger and had more complex needs, and that aligned nicely. But there was a limiting issue. And the limiting issue is that our employer kept saying no. The more our clients got bigger and had more complex needs and wanted us to help them with that, the only thing preventing us from helping them was our employer. So David, we really had no choice. We had to leave. We had to start an independent advisory firm as a true fiduciary for our clients if we wanted to continue to grow with them. So that's really how we started. And then, to your question, look, what I would tell anybody who's listening in this call who's thinking about doing what we've done, I get asked all the time, do you have any regrets? And my answer is, I just wish I did it earlier, but I wasn't ready. The diligence is really important. It probably took me 18 months to finalize my decision, to have my team ready for this. There's some real heavy lifting. There's a lot of sacrifices when those first, I'd say 6 to 12 months. The joke I like to say is people say, what would you do different? I would say, don't start your firm during a pandemic, right? And that's exactly what happened to us, right? Obviously, we didn't know that going in, but the irony is we learned about our technology. We learned about how being independent allowed us to be much more nimble than my peers that were still at my previous employer that were really just stuck at home and they couldn't really do things to help their clients. So, to answer your question, it's been incredibly exciting. It's been incredibly gratifying. Our growth numbers kind of play that out. But it's also been a lot of hard work. And for individuals, they really need to look inward. I got that question asked a lot. Wait, I was 50 years old at the time. At 50, you're going to start your own firm? Why not just ride out into the sunset for the next 10 years? And the answer is what I shared with you earlier. We had no choice. We wanted to do something that was better for our clients and truly be fiduciaries. Does that make sense?
It does make sense. And I want to unpack that. I do want to first, though, go back to the inflection point of going from an advisor, entrepreneur, if you will, in your current setup, to truly becoming an entrepreneur and owning your business. What I hear a lot from folks when they break away from a broker dealer, wirehouse, and go the independent route is similar to you, exciting yet challenging. And typically what they say, the challenging aspect is that they have this realization as they start to set up their firm. They're like, whoa, the firm that I was with before, they did a lot of this stuff for me. So what I'm curious to know is when you first launched, and maybe it's the same today, or maybe it's evolved, did you hire all the various roles and set everything up sort of internally? Did you work with fractional folks to serve as a bridge from breaking off to now? So particularly I'm thinking about like compliance. I'm thinking about evaluating your tech stack, because going from your setup to the independent space, the first CRM you look at, you're like, whoa, this is awesome, because it's way better than what you had. The second one you look at, you're like, whoa, this is awesome too. The third one, you're like, oh gosh, all these are awesome. Where do I go from here? I don't want to make the wrong decision. Who did you lean on for support in making all these decisions that frankly previously you never had to make?
Yeah, lots there to talk about. So yeah, I would call that one's resource strategy. And I think you're spot on. Look, in all my diligence, what I learned in this process is that in my professional view, it would be too much. You're already taking enough professional risk, Dave, to start your own firm, right? You're impacting people's lives in the short term to go through these changes with you, acknowledging it's going to be better on the back end, right? And so I made the decision probably halfway through my diligence that yes, we're going to be our own firm. We were going to be independent. We were going to be our own fiduciary, but we were going to lean on and have firms help us in the early years from some of those things you talked about, whether it's tech stack, whether it was compliance. There's so many, I think of them as vendors, right? Important partners, right? But there's a diligence element to that. So we made the decision, right, early on that we were going to find a firm to work with in that in those processes. So we worked with a firm called Dynasty Financial Partners. Full disclosure, we're no longer with them today, but we were with them when we launched, and they really solved that for us because you've got so many things that are going on at the same time, like so many balls in the air, your head is spinning. You really have to simplify and say, my most important job at the moment is to bring my clients onto my new platform, right? Get them onboarded, get them established. And we had, I'm using fat math, but we probably had 130 families, 150 families that we had to onboard in a short amount of time, right? That is a lot of work, right? So we made the decision to get help in terms of just expediting the diligence on your tech stack, on your compliance, on, basically some marketing efforts, some brand awareness. And then once we got settled in and our clients were onboarded, then you could pause and then you can move forward. When I was describing this, David, to my team, I said, look, let's think of this in 3 years. Year one is survival, right? We just have to survive, right? We have to stay in business, right? Year two is all right, we've made it. Now we can tinker a little. We can start to think about, here's all the things we said we wanted to do. Let's start doing those, right? Let's kind of expand on some of the things that we were frustrated with previously. And then year three is really, now that we've got our footing in place, now we're growing like a rocket ship. So I come back to having a resource strategy is super important. You wear lots of hats early on. So anything you can do to kind of leverage that, I strongly encourage people to think about if they're going through this decision. And then when you're settled, right, then you, in my professional view, may not need those partners anymore. You can do it internally, or you can look at different vendors to help you in terms of maximize those resources. I'll pause there and see if that kind of answered your question.
It does. And I'm curious to know, so you had mentioned first year is survival, second year you can tinker, and third year you can really start to more aggressively grow. But if my notes are correct, over the last 5 years, I'd imagine going from the 350 to 400 million mark up to 800, give or take, call it 25 million or so, going from 5 to 10 team members. And please correct me if I'm wrong, but I'd be shocked if that happened in a 3-year period from years 3, 4, and now 5. So there had to be some growth in those first 2 years as well. And I would imagine, and don't let me put words in your mouth, but I would imagine it's because your clients saw the vision that you laid out for them as to why you were making the move, and perhaps wanted their friends, family, colleagues, whoever, to participate in that same experience that you are now going to be able to deliver them. And you probably received unsolicited introductions in those first 2 years. Am I correct in assuming that, or has your growth truly come in years 3, 4, and 5?
It's somewhere in the middle. It's all of the above, right? So, if I could maybe share with your audience our growth strategy, and something you said at the top of the call, which I want to kind of speak to, is we had frustrations at our previous firm, right? We felt like we're missing out on opportunities, right? Unfortunately, like the only reason you and I in this hypothetical situation couldn't work together was because what I referenced was our employer. So let me give you like a real example, right? So a real example would be, David, you're a business owner and you've come to me, whether it was from an introduction from a mutual CPA or colleague, and you said, look, Craig, I'm going to exit this business in the next 3 years. I need help today. And so we have a great initial discovery conversation. And then when it's time to say, what are the next steps? And I would be stuck. I would be stuck because the only way, right, for me to help you in this scenario, this hypothetical, is for you to first transition your liquid assets onto the custodial platform. Then and only then could I deliver advice by bundling that advice under what I think is kind of the older model, like the old way of doing it, right? Charging for assets under management. There's nothing wrong, by the way. We're at a wealth advisory firm. We manage assets every day, but there's so much more that we do. So, one of the things that we did very quickly was develop and create our own consulting agreement, so that now, and really from day one, when we would meet with a business owner who said, I was introduced to you by our CPA, and I'd love to have a conversation. Now we can say yes. We have created a consulting agreement where you and I can work together, right? And we charge a flat fee for these services in terms of helping you before the liquidity event, so that we've maximized, right, your enterprise value. So that's no doubt been a game changer for us, and why we've been able to grow so much faster than we did previously. I think the second thing would be, we've got talked about marketing. Look, David, when we started our firm 5 years ago, here are the people that knew about Regent Peak Wealth Advisors: our spouses, my attorney, my CPA, and some situational partners that were part of the diligence process. But when we launched, nobody knew about Regent Peak Wealth Advisors. We had to get our name out. We had to create brand recognition, brand awareness. So in my previous platform, if you and I were both advisors in that environment, we can only use the same collateral. We couldn't create I could not do this interview with you today, by the way. No podcasts, no videos, no white papers, nothing. We used to joke, one of my team members, when his wife would get promoted, he couldn't even like her on LinkedIn. I mean, think about that. What's the harm, right? So that was a frustration point for us. So now we create this firm, and right away, we hired a marketing firm locally here in Atlanta to help us, right, build out our brand, right? Build out our website, build out content, video, podcasts. We consistently do that. You referenced street cred. We hired a PR firm to give us more national exposure. So I would say the brand awareness, the marketing, the content creation has been a significant driver of our growth. The consulting agreement, allowing us to now say yes to so many opportunities where previously we had to say no, has been the second one. And then the last one, you touched on this at the top of the call, so I'll take the opportunity now to explain it. I talk about sourcing introductions versus receiving referrals. So let's kind of unpack that a little. So receiving referrals, and they're wonderful, by the way, I would say no to them, but receiving referrals, generally speaking, the only work I've done is that hopefully you've had a great experience with our team and you thought about us when somebody came to you and said, who are you working with? Or I'm not satisfied with my current advisory team, or there's a money in motion situation. You thought about us in a positive way and you made that introduction. Thank you very much. We welcome those. Those, of course, occur. But to build your business on that or that alone, I think is the odds are low, because referrals just don't come in that often. Sourcing introductions is almost the opposite. I'm doing the work, right?
I've identified an individual that I think you know, or I know you know, and I'm gonna ask you to proactively put us together, right? So that would be and I'm gonna give you an example right now of this story happens a lot. So you're a client of mine, David, and you've told me, look, Craig, I'm pretty confident I'm gonna get promoted in the next 2 months, right? The C-suite executive team have told me I'm next in line. So as long as I don't mess it up, I'm gonna be named, right? Congratulations. We've updated your financial plan. We've designed the new equity compensation programs, all those right inner workings, things that we must do to show you how this is going to impact you in a positive way. You call me 2 months later, say, I got the job. Congratulations, David. So I'm in that conversation. By the way, who's now going to be your successor? Oh, interesting, Craig. Her name is Sally. I was on the selection committee. I helped identify her. She actually is with our company, but she lives in Texas. She's relocating here to Atlanta in a couple months. She's a rock star, right? Great. I take that note. I basically finish our conversation and I come up for air. What did I just learn? I learned I got a name of somebody who's a rock star. You helped pick her. Her compensation, well, I don't know what it is. Last time I checked, companies can't discriminate. So her compensation should be very similar to yours. I know what your compensation is. I've generally qualified her. She's somebody I want to get to know, and she's moving to Atlanta. I want to get to know her. I will call you back up in 3 to 5 days. Say, hey, David, remember that conversation a week ago where you told me about the promotion? Sure. Congratulations once again. I was thinking, David, Sally out in Texas is moving to Atlanta. And so this is a new neighborhood for her, a new city, lots going on. And she's being promoted and, gotta believe her equity compensation is going to be very lucrative. She may need some help. Would you mind making an introduction between me and her? I'd love to meet her. Here's what happens, right? It's one of two things every time, right? The first scenario, this doesn't happen often, but it does. Craig, I like the way you think, but guess what? Sally's husband's in the business, right? Sally's cousin's in the business. Don't waste your time. I already thought about you. Thanks, David. I appreciate that. Okay. Rare, but it happens. Here's what almost always happens. Why didn't I think about that? And I just, to make you feel better, said, look, David, it's not your job. That's my job, right? That's my job to think about that. Would you mind making an introduction? It could be an email introduction. It could be flipping your phone number when she moves to Atlanta. It could be meeting together for a cup of coffee. And that's how I source introductions. So I'm proactively looking for names of people that I think may be qualified. And my last point, and then I'll stop and kind of pause here, is, I have this saying in our practice: there are suspects, there are prospects, and there are clients. It's my job to take a suspect who's a name, right? Qualify them or not. If they're qualified, I move them into the prospect category. Then I try to convert them to a client. So that's kind of the inner workings of how we think about our growth strategy. So those three things have really allowed our firm to grow significantly faster than we were growing previously. So I'll stop and see if you can kind of envision what I'm describing.
So there's three main things that I'm hearing, and I want to hit on each one individually to go just a layer deeper. And I want to go through them in reverse order with what you just shared and work our way backwards. So you had just mentioned, call it referrals or sourcing, right? So growing through introductions. Before that, you mentioned your marketing and PR strategy. And then before that, you mentioned being able to integrate an additional way to engage with clients through a consulting agreement that you didn't previously have the ability to do, which allows you to frankly work with more people, right? So as you're going through, I'll just call it the referral strategy, the introduction strategy, the sourcing strategy, okay? I'm smirking. And the reason why I'm smirking is because I always share with people, I say, listen, part of the reason why advisors don't have the courage to proactively ask for referrals is because the way that they ask is like weirdly uncomfortable. It's, I get paid in 2 ways, or it's the best compliment I could receive is, or it's, which is arguably the worst, who do you know? And think about the who do you know question, Craig. It's, if I said, hey, who do you know? you have immediately 200 people, and you're not thinking of all of them simultaneously, but you have a couple hundred people running through your brain, and then your response 9.9 out of 10 times is, I don't know, I can't think of anyone, but I'll let you know. And now you're tasked with following up about the follow-up, about the follow-up, and making it seem uncomfortable. And you went from just serving the heck out of them, giving them a great experience, to now your next 2, 3, 4, 5 touch points are trying to take from them, right? So, and I use a similar strategy, but I call it something different, where I say, hey, how much better would it be if you just fed them a name and had a conversation around that person? Rather than saying, who do you know? It's, tell me about Sarah or whoever. And when you do that, you're able to actually have a conversation about an individual to further qualify before your own qualification process that you went through, that Craig, you just nicely brought us through how you find those people. And when someone says to me, well, I don't know who they know. Okay, well, that's an opportunity to be a better conversator, to be able to identify people in their circle that are influential and in a similar position. There's a really good book, just as a side note. And this gentleman was on our podcast. Gosh, I feel like it's been a couple of years ago. Ivan Farber, he wrote a book called Conversations About Conversations. And it's literally a book on how to have conversations for folks that don't know how to call it get to know their clients beyond their finances. And through a regular conversation, annual review, discovery meeting, fact finder, whatever you want to call it, if you're not identifying 3 to 6 people that are in their trusted circle right away, you have an opportunity to develop that skill set to in turn be able to feed them names moving forward. So I don't know if I have a question as much as I'm opining and solidifying what you shared, Craig, which is, you're way more likely to get an introduction from someone when you feed them a name. Because again, it's not their job. Like you said, it's your job. So make it easy for them. And what you'll find is that these people are more than willing to help and make an introduction. It's just not their job to go and think about this beyond the meeting. So I don't know if you have a response to that, because I'm just kind of saying statements over and over, but I a bazillion % agree with what you're saying to increase the likelihood that you get a great introduction from someone.
Yeah, thank you. So a couple quick thoughts, because you did a great job of kind of solidifying, kind of our approach to this. Look, I'm a client too, right? And I like to think of it this way: how would I feel about our firm recommending, our firm doing anything, right? It's like I'm the test case, right? And so it'd be like me, and I meet with my CPA twice a year, whether it's in person or over a video cast to do some tax planning for my situation. It would be like, David, for me after that meeting, for my CPA to say, hey, Craig, I'm really glad you've appreciated the value of our relationship. Would you provide me 3 names? It's just awkward. Like, it's just the whole, as you said, the whole tone just changed. And so I'm like, that's just, I don't want to do that, right? There's firms that are literally built that way, that in my previous firm, my previous time at Merrill, like, I would go to workshops where this is what they would recommend. And look, they're not bad people, right? They have good intentions. I just think it's not the optimal way to do that. So yes. And I think the second one is the subliminal message of sourcing names is that you're growing, you're hungry, you're still open for new business. I've had clients say, I've heard or read about your success, right? I thought you guys were just kind of just not content, but you understand my point is, I didn't know you're taking on new relationships. It's a subtle way to remind your practice and your clients that we're scaling for smart growth. So yes, to everything you said.
As it relates to marketing, or actually one more comment on the introductions, because you brought that topic up, which is they weren't necessarily aware of the fact that you were growing. And oftentimes and I actually sent you a couple videos on this in an email that will further solidify beyond this comment what I'm about to say, which is 90-something% of clients are happy to make an introduction. They don't because A, you never asked or fed. They don't know that you are growing, or they don't know the types of people that you want to work with. So if you can just help them, educate them on those things, remind them of those things. Hey, the reason why we've gone from 5 to 10 team members is because we want to be in a position to grow and serve the people that you care about the most, and not just stop that value with you, right? Just that subtle reminder. So I just wanted to emphasize that. From a marketing and PR standpoint, and I say this nicely and whatnot, but welcome to the wild, wild west, where you can like your wife's LinkedIn promotion post. So with that said, what does your marketing strategy look like? So you're, attending podcasts like this. Are you putting out blogs? Are you putting out videos? Like, what are you doing just from a bullet point perspective?
You bet. So a couple thoughts there, right? So we have two fantastic partner relationships, our marketing firm and our PR firm. And I think of them very differently. I'm really glad you asked this question, because many folks kind of bundle that together. And while there may be firms that can do that, I think it's better to separate them out, yet make sure they know of each other so that they're collaborating on your behalf. So, year one, right? Month one, right? Again, nobody knew who Regent Peak was. So we had a concerted effort of starting to build out our brand awareness by having content that was, right, important, that was informative. But the last thing you want to do, David, is saturate the marketplace, right? I'm sure you know this, right? There's some people that are on LinkedIn posting every day, and that becomes a turnoff, right? Again, just you try to put yourself in the other person's shoes. So we try to think about something that's timely, right? That truly is informative and that may catch somebody's attention. Not everybody's going to read it, of course. So again, it has to be kind of this smart marketing strategy. So many times when there's opportunities to speak to something, if we don't think it's truly relevant, if we don't think we're the right firm to speak to that, or if we think that topic has been so saturated, we'll respectfully pass on that, right? Second thing, your firm is only as strong as its weakest link. So one of the things I told my team when we were going to start Regent Peak is we're all going to be doing marketing. We're all going to be responsible is the wrong word. My ask of each of you is you don't have to do it as often as I do it as the leader of the firm, but look, clients and relationships want to know about other people in the team besides just the owner, right? I'm not sure if it's my peer or my marketing firm. It's my marketing firm now. They have confirmed that our CFO has the most people looking at the bio within our team, right? Who knew, right? But that kind of makes sense. Wealth advisory firm, right? And awesome for him, right? He would have not had those opportunities in our previous environment, right? So, the marketing and content strategy is very thoughtful. We meet with our marketing firm twice a month, right? We go through specifically what's on the docket moving forward, what are things that they would like us to think about, who should be talking to those. So we have a true agenda throughout the entire year. From a PR perspective, we meet with our PR firm on a monthly basis. Same thing. Here's some things that are coming down. Here's some things, Craig, that we would like you to speak to. Are you open to traveling? I just recently went to New York City to do an interview at the NASDAQ, right? So it's very intentional, right? It's very thought through. And I would tell you, David, from a marketing perspective, we go back to growth. Outside of my team members, i.e. team compensation, marketing and PR is my second largest line item on my P&L. Like that's how important I've decided. I think it is. Others can think differently about that, and they do. But from our perspective, I think it's a huge opportunity that may be wasted if you're not pushing out content which is informative, that people want to hear, that again puts your name out there. I'll pause.
I'm smiling ear to ear right now because I agree with everything that you shared, and I'm glad that you're working towards continuing to maximize the opportunity that you're in now that the chains have been released from a compliance standpoint of the dues, and like you can actually operate as a business and market like a business should market, right? But it's amazing because we have marketing services as well. We service fractional CMOs to firms of your size. And it's amazing when we meet with folks and we're like, well, what's your marketing budget? And we typically hear one of two things. Oh, well, we don't necessarily have a defined budget. And, or the other response is it basically calculates to be, 1, 2, sometimes 0.5% of their revenue. But then they have these big, big growth goals. And it's like, what's going on here, right? So the fact, and the reason why I'm smiling ear to ear, is the fact that your second largest line item, cost, investment that you're shelling out on a monthly basis, a yearly basis, is your marketing and PR. And to me, that, and obviously there's plenty of other reasons for this, but it's no surprise to me that you've doubled your AUM in your business in just 5 years. It's a direct reflection of the time, the energy, and in this case, the dollars that you're spending. And you're not doubling from 20 to 40 million, which you can kind of sneeze and hang around long enough and that will happen. You're doubling close to $1 billion. And my guess is that you'll be at $1 billion probably around this time next year, if not sooner, at the current clip that you're going at. So it's a direct correlation to the willingness to actually put your money where your mouth is. And I want to bleed into this topic here in a moment about putting your money where your mouth is and making sure to execute on the things that you said you were going to do. I want to put a pin in that for now, because I don't want to forget about the third piece that I want to go back to, which is integrating the consulting agreement. So I guess I have a two-part question. One, you may know exactly, or just give you a ballpark. The second one is where we'll spend most of our time. So the first question is, what percentage of the firm's revenue is from the consulting arrangements? I want to get a sense of like how much you are missing out on in your at your prior firm. The second part of that question, where we'll hang out for a bit, is what are you providing in exchange for that fee? Like, are you doing actual exit planning for these business owners, sort of like the CEPA designation, certified exit planning advisor? Are you hanging out mainly in the transactional side of that deal, of that transaction? Are you like, what are you doing? So percentage of revenue from the consulting arrangement, and then what are you doing in exchange for that fee?
You bet. So let's take each of those. So the first one is, I don't know the exact number, but here's what I do know. When we started Regent Peak Wealth Advisors just over 5 years ago, remember I said you better execute, you better do the things you said you were going to do that were frustrating you. Otherwise, why did you take the professional risk? And there's lots of risk, right, to leave. Every new relationship we've onboarded at Regent Peak Wealth Advisors in the past 5 years has a consulting agreement as part of their total suite of services, right? So if somebody is in a relationship that we onboarded that isn't going through an exit scenario, isn't about to go through an unfortunate divorce situation, needs mediation support and help, right? Pre-planning, right? We still think it's important to separate out the responsibilities, right? In terms of not bundling these things under a AUM pricing model. Because from my perspective, it's a little too opaque. I like to delineate, there's a better way to say it. I like to delineate all the things we do from a financial planning perspective, all the things we do from a modeling your equity compensation as you're talking to recruiters, right? You've come to this hypothetical and say, Craig, I get called all the time from recruiters, but this one has really interested me. This opportunity, I think, is really, I'm excited about it. And what I would tell my relationship in that conversation is, fantastic. You figure out if it's something that you want to pursue from a professional perspective. It's going to enhance, it's going to build out your resume, it's going to build out your skill sets. When you're close and it's time to model compensation about what you're walking away from versus what you're going into, get us involved. We've got lots of experience, lots of expertise there. That's part of a consulting agreement. If you're a C-suite executive
that the majority of your net worth is tied up in your benefit programs, deferred compensation, retirement programs, profit sharing, 401k. And you're like, wait, I'm a huge client, but nobody wants to talk to me because, I can't move money to the custodian. We can now do that. So we've made it, right, a concerted effort that every new relationship has a consulting agreement and a separate asset management agreement. And we think that's where the industry is headed. And I have no problem saying this, David, in prospective conversations, sometimes, right, I actually lose out on opportunities because this is just like blowing their heads out. They can't understand, like, well, that's not how everybody else is presenting it. And I said, well, I understand. I said, that's where I came from. But this is where I believe the industry is going over the next 50 years, to separate out the responsibilities, right? So I don't know the exact number, but I will tell you every new relationship that we've onboarded over the past 5 years has a consulting agreement. The unique situations would be some I referenced, right? Where you have some business owners that have some big exits. You have a divorcee that basically, here's a real example. I had a divorcee that basically came to me and was interviewing other firms, and the other two firms were with a wirehouse. And she wasn't sure who she was going to pick. It was really close. And then she came back to me like a week later and said, well, guess what? I'm going to go with your firm. And I was like, we're really excited. Thank you. She said, well, I need to tell you this. She was, the other two firms weren't allowed to sign, right, the documents, a confidentiality agreement from my soon-to-be ex. This individual is in private investments, owns his firm. His firm basically said they've got a lot of intellectual capital. They are requiring all of my advisors, CPA attorneys, wealth advisors, to sign this confidentiality agreement. Guess what? We were able, don't talk about being nimble, David. We looked at that document. This is years ago. I think we signed off on it in a half a day. It's probably even quicker. The other firms weren't even allowed to sign it, right? So I can't give you the exact number, but just know it's ingrained in every new relationship we onboard. It's part of our suite of services. And now I apologize, I forgot. What was the second part of your question?
Well, I want to hit on that. I like that because a lot of advisors do something similar, but they're specifically calling it a financial planning fee. And I feel like by calling it a financial planning fee, you're limiting the scope of the discussion that you can have with that client. Whereas when you're calling it a consulting fee, you're broadening the scope so that you can continue to add value at the perimeters, so to speak, and not just, here in terms of what's right in front of you. But also I feel like calling it consulting in a good way is a little bit of wordplay to where it seems like it's more of an elevated experience beyond just calling it a financial planning fee. So I like that. The second part of my question, Craig, is, and you kind of shared examples, so maybe share another example or two, which is, what are they getting in exchange for that fee? So you shared about A/B testing essentially between job A and job B when they come across that scenario. What's another example that you could share?
You bet. And I want to go back to something you said just a minute ago. So, full disclosure, we actually, the acronym for our consulting agreement is Financial Planning Consulting Agreement. But within that, it gives us so much, as you said, latitude to go in so many different ways, right? In my view, I say this all the time, every relationship should have a financial plan, right? It would be like, now remind me, you're in Florida, right?
Yes.
Yes. It would be like driving on I-95 with a blindfold on. You wouldn't do that. That's dangerous. That's crazy, right? You wouldn't drive on the interstate with a blind. Not having a financial plan is like not knowing how you're going from point A to point B. That's dangerous. Every relationship in our practice has a financial plan, right? But back to your point, having a financial plan consulting agreement just allows us the latitude to go in so many different ways, right? The multifamily generational wealth opportunities, meeting with matriarch, patriarch, their kids in their 30s and 40s. Well, that's not asset management. Those are deep discussions that are carried through over many years of talking about how assets will pass in a thoughtful way, and putting the next gen, giving them the opportunity to be successful versus just winging it, or mom and dad saying it's just an awkward conversation. We've never really talked to them about that. We don't like talking about that. Well, guess what? We'd love to mediate those conversations. Where does that land? It doesn't land under an AUM pricing model, right? That lands in a consulting agreement, in my view. So I just wanted to touch on that. So, yeah, I gave you an example of like a divorcee works really great. I think another example would be, I remember this is years ago. I was introduced by a CEO of a publicly traded company who said, Craig, there's an individual I'm targeting that I really want to hire, coming from the competition. You don't know this individual. Okay? I've told this individual, in this instance it was he should contact you because you know everything, you know a lot about our firm's compensation. He's walking away from some significant unvested equity compensation. And he's just trying to wrap his arm around the fact that, like, does the math work? Right? Can he get comfortable with the fact that what we're putting in front of him is not only comparable, if not better, from a wealth creation perspective, but obviously, you know, from a resume, from a skill set, from moving up, right, the org chart to a much higher position, which is going to require him also to move his family, et cetera. He needs somebody to just help him with that. I've told him that you helped me in these same conversations a year ago when I made the move to become CEO. I think the two of you would just hit it off, right? And so think about this, David. This would be like me calling you up. You don't know me from Adam. This individual had no advisor at the time. And my conversation with him were, look, you know, I would love to advise you on a go-forward basis, regardless of whether you make the transition or not. I'm here acting as a consultant. I'm here to help you maximize your opportunity. Think about that. My client even said this instance, I know, because I know you, Craig, really well, that if there's something that you don't like about our offer, you're going to tell that individual, right? So I know in some ways you may be doing things that I wish you wouldn't, but that's your fiduciary obligation, right? That's your responsibility. And that's why I feel so confident that this individual should talk to you. I could never have done that previously, right? And that not only became a new opportunity with a new relationship, it's significant. And now that individual has been promoted to much greater levels on the C-suite ladder. I would have never had that opportunity. So there's, I mean, countless is a stretch, but there's many opportunities where if we didn't have a consulting agreement in place, we couldn't have entertained, spoken to. The answer would have been like, talk to me after you've made the decision, and then I'd love to help you. Well, guess what? So does the 14,000 other advisors from my previous firm, let alone every other RIA firm and Wirehouse advisor out there. I mean, the odds are stacked against. Hope that helps.
Yeah, it does. And or you'd be stuck helping that person for free for the hopes that they hire you down the road. And we all know that that works out enough times to keep some folks addicted to doing that. But when you look at it all together, you realize that it's an incredibly inefficient use of your time long term. So I love that. I know we're getting close to time. So I just want to more so make a comment about this, and anything that you want to comment in return quickly, certainly feel free, and then we'll start to wrap this up. So you had alluded to this a moment ago, and we talked about it in depth in our intro call. And it's the quote that you shared, that you better execute on things you said you were going to do. So things like marketing, things like the consulting agreement. And I just want to make mention that it's cool to see that someone, because I see a lot of people transition from wirehouses, broker dealers to the independent space, and they just chill because their payout essentially doubles. And, you know, so their revenue and their income doubles without their business doubling at all. So I commend you for following through, because it could have been easy to just chill. And I think what's really cool about executing on these things is you had to have shared with your team the vision of what you wanted to build, and you need to follow through for them, right? You need to follow through for what you shared with your spouse you were going to do, or any other friends and family. So it's not just executing on the things that you said you were going to do as it relates to how you or what you were going to implement into your business, but also being a man of your word and following through so that all the people around you can even further believe in Craig. So more or less a long-winded compliment slash attaboy for doing those things, because the reality is you're responsible for a lot of people. And if you did not follow through on those things, you wouldn't just be letting yourself or your clients down, but you'd be letting your family and your teammates down. So it's nice to see that you took the ball and you ran with it in a very, very positive way.
Well, thank you. That's exactly how we thought about that. And that's exactly what I presented to my team members. You know, we all said that we put our hands together in the pile and said, we're going to do this because we think it's better for our clients and better for ourselves. I had so many team members, David, that were stuck in a specific title, and they were just rock stars. And again, the only thing that was preventing them from shining was the title that they were kind of stuck under, right? So the other beautiful thing about, you used the phrase Wild Wild West, ironically, I used that too. When I was during my diligence, I said to my team, look, remember, it used to always be no. Now, outside of the regulatory parameters, the answer is going to be yes. And we get to decide if we want to pursue that, right? But, you know, to your earlier point, unlocking, right, the shackles to let your team members grow. That's why they're excited about that, right? The money, look, I've always said this, I'm not motivated by money. The money will come. It's being able to do things better for your relationships and better for your team members. And I take it back to culture. That's the one thing that we really haven't talked about, is building a culture where your firm, look, we enjoy coming to work every day. Does everybody have a bad day? Of course they do. That's human nature, right? But we enjoy coming to work today. I cannot tell you how many friends I have in the industry that are miserable, right? And I'm like, life's too short, right? You can change that, right? It's up to you. You don't have to settle for that environment. And so one thing I want to say in culture is, we talk about this a lot early on within our growth strategy. It was also our culture strategy. I like to say is that when we were at a previous firm, I would sit in a conference room like I'm sitting in right now, and they would have these big words around the perimeter of the office: trust, ethics, right? Values, all super important, and things that we live by, of course. But we didn't create those words. Somebody in some office somewhere who doesn't know our team created those. We wanted to create our own culture that we can live by every day. And so when we bring in new team members, right, we're interviewing people, they kind of say like, hey, look, what I really like about this is that you have an environment where you can help people and you actually have fun along the way. And I think that's the missing piece that I would say, that we're going to work some pretty hard hours. Let's have fun doing it as well.
I love that. I feel like we could continue to chat, and I would like to continue to chat at some point. But for now, one of the questions that I'd like to end with, Craig, and for those of you listening, if this is the first episode that you're tuning into, the staple question that we ask all of our guests at the end is a book that's had an impact on them. And it's our way of distilling a reading list for all of you listening in. For those of you who want to grow, who want to become better, who want to continue to develop your skill set, there's so many different directions you could go in. I mean, you can see if you're watching the video, you can see all the books behind me. It's like, where do you start? Well, let's start with a book that's recommended. So, Craig, the book that you chose, and just a quick 1-2 minute segment on as to the impact that it's had on you, is The Outliers by Malcolm Gladwell. I've read that book as well. So 2 recommendations for that book, 2 points. What's the impact that it's had on you, to the extent that you chose this out of presumably a bunch of other books you've read over your life to talk about today?
Yeah, you bet. So I think I mentioned this earlier, lots of conversation. So my background is, you know, I have an engineering degree from graduating from college. I'm an engineer, as I like to say. So I love statistics, right? I love just thinking about things from a statistical perspective. I love information, but how to take in that information and use it in a more thoughtful, smarter way. So The Outliers, I mean, I got hooked from, you know, the first chapter, first paragraph. Don't hold me to this. I think it's about, you know, the community in Pennsylvania, about like why this group was so healthy compared to the averages, and he certainly talks through that. To then going into, you know, I'm a hockey player, I'm a hockey coach. My family plays ice hockey. To statistically seeing why were these Canadian kids, right, so much better than their peers, and looking at their birth years. So we can go on and on, but the takeaway for me was the 10,000 hours. Like, it just clicked. I was like, I mean, it's so simple, right? But yet we're so busy every day, we forget about that. I tell my team every day, like, look, you forget the work we're doing today. You may not see the benefits for another 5 years, right? But putting in the heavy lifting today will pay dividends. We all just get better, David. You get better at your craft by doing it every day. Hopefully, everybody is learning. If you're not learning, then you should just shut it down. So for me, it was like an aha moment. Well, of course, 10,000 hours, right? There's statistical reasons for why certain things play through. Many of those may not be obvious, but if you could take the time and pause a little and understand why, then you can use that information to your benefit or to your advantage. And so that's why it was so meaningful to me.
Well, on the 10,000 hours idea that you shared, and it's the idea that to be great at something, you need to put in 10,000 hours, right? The aha that I had is there's certain things that I'm going to put 10,000 hours into, and there's certain things that I'm not. But that doesn't mean that I shouldn't be implementing those things. So I'll give an example before we wrap up. You're not going to spend 10,000 hours, Craig, learning about marketing or learning about PR. You're going to leverage someone else's 10,000 hours. You're going to pay for that, right? Of course. But you don't have to go out and do that on your own. You focus on what you're great at and you hire out other people based on their skill set. It's why a plumber can come in, the example that is always shared, and tap the pipe in the right way. And they walk out and they're like, yep, that's $500. And they're like, what? That took 3 minutes. No, that took 10,000 hours.
A great analogy. Yeah, I've not heard it framed that way, but you're spot on.
So with that said, Craig, this has been wonderful. I'm impressed with what you've been able to build, particularly in the last 5 years, never mind the 25 years prior. And it's amazing to see how much you were able to grow in such a short period of time, but you're also at the tail end of that 10,000 hour mark. So a lot of folks find themselves at the 5,000 hour mark, 7,000 hour mark, but it really starts to click towards the end of that period of time. And it's reflective in the growth that you've experienced. So with that said, Craig, if there's folks listening where they want to tag along for your journey, stay in touch with you in some way, shape, or form, where can we send them?
You bet. So again, David, thank you for the time today. I've truly enjoyed it. So the easiest way would be obviously one of two, just via LinkedIn. They could certainly connect with me there. Our Regent Peak Wealth Advisors website is a robust website with lots of content, lots of ways to connect with us, to learn more about our firm. And kind of back to something we talked about a little earlier is, look, we have 10 team members with easily north of 100 years of industry experience, much more, right? But we're a firm of only 5 years, right? So, my ask of you and your audience is, if you're looking for an advisory team, right, we're open for new business, right? If you're looking for an individual to talk to in another interview or a podcast or a video opportunity, please think of us. We still have more work to do, right? We're 5 years, and if we've doubled in so many ways in 5 years, there's no reason to think we're not going to double in the next 5 years, if not more. And that's been kind of my mantra to my team. We should double even more with the things we've learned along the way. So we would welcome those opportunities.
Love it. And again, thank you to the folks over at Street Cred for introducing us. And a little challenge to you, Craig. I'll leave you with this. I want to have you back on, but I want to do so when you hit 1 billion. So let's see how quickly we can have you back on the show.
I love it. Challenge accepted.
All right. Enjoy your day.
Thanks, David.